Hey traders, this is Taylor with the free video for Tuesday, September 21st. So, the big question here is, do we once again buy the dip? Look at the S&P 500 for the last year or so, and buy the dip has been a mentality that continues to serve you well. So that's a big question at this point as we get this flush. Do we take advantage of this push to the downside to try to get long some of the best trends and setups in the market? And I think you want to be a bit patient here. There's a few different perspectives you could look at that paint slightly different pictures. And just looking at the daily chart here, in the short term, the structure here to the daily chart of the SPY is making my job of being patient before getting long pretty easy. It's not quite the structure I want to get long into. There's a daily squeeze firing to the downside. You have red 10x bars, and there's no stacked EMAs. So when I think back to, mid-August, mid-August was pretty solid. Profitable trade on Facebook. Mid-August hit a trade here on Apple. Took home profits in mid-August on Tesla. I'm showing this all here for a reason. Took home profits on real estate. Took home profits on XLC, NOW. I bring all that up to say, when the S&P 500 was setting up in a daily squeeze firing to the upside in mid-August, that's when you had the wind at your back. So it was a pretty advantageous time to get along good-looking setups like Apple, Facebook. That's not where we are right now. Rather, it's actually the quite opposite. There's plenty of good-looking setups out there, a few of which we can cover, but you do have to take into consideration the S&P 500 is firing a daily squeeze short. So in the short term, you don't quite have the wind at your back that you had back here in August. So I think you have to take that into consideration. And then looking at a weekly chart here, this is another reason I am being patient. At the moment, all this is a dip to the weekly 21 EMA. And as a matter of fact, it's the first dip to the good old trusty 21 since October of last year. So from that perspective, it's just a long overdue dip to the mean. Now obviously, you have to hold here, but if we do in fact hold support here, a few weeks down the road, I think you're looking for some structure there to catch it next leg to the upside. So, bigger picture thinking, I like that pullback. Take a look here at the Qs. The Qs has a really bullish weekly chart. Stacked EMAs, green 10x bars. So, from a trend perspective, pullback to the weekly 21 potentially is a beautiful thing. So I do think looking at a few things here like the Qs, like the S&P 500, like an Apple, for example, the weekly charts are painting a bit of a different picture. Where you build up energy at the weekly 21, you get weeks and weeks of momentum as it pushes to 2 to 3 AR, and then there's a growing probability you got to pull back to the 21. So it's pretty much the ebbs and flows of the market, but when those ebbs and flows are taking place on a weekly time frame, it is going to look a little bit ugly on a daily time frame or a 4-hour, etc. So that is one perspective for the swing traders out there that I think should have you being patient here. You got a lot of the best trends out there, the Apples, the XLKs, etc., pulling back to what is just weekly support. Now we have to hold here for that to do anything good for us, but I do think you want to look at the market rather from that perspective. Say into October, because I do think there could be some opportunity there. In the short term, though, these daily charts got to clean themselves up. So another big component of this is the Volatility Index. The market had that flush in May, you had the flush in June, July, August. And every time the market turns a corner and rallies back towards the highs. The huge component of that in May, in June, July, August, is you get that spike in volatility, but then volatility dies down. And it's when volatility dies down that the market tends to just continue on its overall trend. So that's the missing component right here. VIX isn't quite throwing in the towel. So I think before you get too aggressive to the upside, you wait for volatility to die down. On these weekly time frames, that 21 EMA is going to be key support. And if we can find support here, then I think you're looking for slightly better structure to your daily charts. I like to see exhaustion of some bearish momentum, potentially working our way back up towards the buy zone. But slowly but surely, if we hold key weekly support, and then the daily charts get a little bit cleaner here, and volatility dies down, then I would be looking to get long. because from a weekly charts perspective, the trend here doesn't change if we continue to close above the 21 EMA. So I think a lot of reasons to be patient there for the swing traders. Now, if and when the market does shape up here a little bit, here's a few spots I would love to put some cash to work. So, Home Depot, let me clean this up a little bit, but I think a good example here of the kind of thing you want to focus on during volatile times like this. It just completely behaves. It holds structure, stacked EMAs, daily squeeze continues to gain bullish momentum. That's what you're looking for when the market is getting shaken up a bit, because if and when the market starts curling back towards the upside, these are the kinds of structures that should lead to some solid moves. So I think you keep a Home Depot on your list. We've got a position there in my mastery. I'd love a little bit more. And I think Lowe's is just as clean. So I think Home Depot looks solid. Tesla here is another one that's held structure really well during the volatility. So you do have a brand new daily squeeze. We're 2 days in here. You're holding support year 21. And I think you pay close attention here to the 4-hour squeeze. I'm looking to get a little bit more exposure here, because I already got a couple positions. But I am looking ultimately for that 4-hour squeeze potentially to trigger the next move towards the upside. So you have squeezes on the 4-hour chart, you got squeezes on the daily, the 3-day, and then most important to me is the weekly. Because I think the weekly has a good shot here at getting Tesla back into a bit of a trend. So market stabilizes a bit, volatility simmers down a tad. I think you got a good structure here in Tesla. Another one I'm a big fan of is Netflix. So I'm going to get rid of these drawings here. But what I'm looking for in Netflix is a continuation of the weekly squeeze. So Netflix here was in a weekly squeeze for just about a year, and you finally have that squeeze firing long, and at this point, previous resistance is proving to be support on this little dip here. To me, that's pretty bullish. You can see you got the green 10x bars, all that good stuff. So I like that weekly structure, and I think if Netflix can hold above that 565, 570-ish, you could get some pretty quick continuation here. So no daily squeeze just yet, but we are hitting here at the 21 EMA. So I think you wait for a bullish 4-hour squeeze. You wait for a bullish 2-hour squeeze. Just something with some good bullish edge on a lower time frame that could serve as your quote-unquote early entry to try to catch that next leg to the upside off the 21. But keep in mind, if the market continues to go lower here, Netflix, Tesla, they're all probably going to go with it. So these are all good-looking structures. You just need a market behind you. So I like Home Depot, like Tesla, like Netflix, and in terms of tech here, I do like Microsoft. Compare it to an Apple. Compare it to a Facebook. Those aren't looking all that good. Microsoft here holds structure, just kind of average true range noise here. So market firms up a bit. I think you're looking to play that daily squeeze for a push into what is likely going to be brand new all-time highs. And you could take that same advice. Wait till the lower time frame, like a 4-hour chart, has a bit of a better structure. Something of this nature. A squeeze, positive histogram, stacked EMAs. You sneak in there with an entry in the 4-hour, then you can catch a lot of that move. So you wait for things to tidy themselves up a bit here under the surface, but next week, 2 to 3 weeks, market holds up here. I do like Microsoft to the upside. And then one more I got for you here is Moderna. Just a great looking setup. Stacked EMAs, green 10x bars everywhere, and it holds structure here as the market is slipping and sliding. So there's your 4-hour squeeze. As soon as that histogram starts to turn positive, I'll be looking for an entry there to the upside. If the market, of course, is looking a little bit better there. So needless to say, there's no lack of good looking trend and structure out there, even with this flush to the downside. So these names like a Home Depot, a Netflix, a Microsoft, a Tesla, etc., if they continue to hold structure, they just need a market behind them. So in terms of answering that big question here, do these good-looking setups get a market behind them? Bigger picture thinking out into October, this is just a normal dip to the weekly 21 if we hold here. And if we hold here, and I'll show you the cues here as a better visual, it's not so much that we're looking for the move back towards the upside immediately. It's more so a thought process of just looking at the structure of the trend. The weekly 21 EMA is a totally normal spot to take a little bit of a break. And then you're looking for daily squeezes. You're looking for 4-hour squeezes. You're looking for some structure to get long on top of that weekly launching pad. So I have to like the trend here as far as the weekly chart goes. I do think there could be a plate of opportunity there in the weeks to come. In the short term, and as we head into the Fed, be a bit careful here about fighting these daily squeezes. If anything, give your trades time. You want to get long Apple here. I think you do that into October, November expiration. I don't think you so much try to do that for this Friday's expiration. But obviously, that's just my opinion. The market shall do whatever the heck it wants, as we all know. But those are a few things to keep in mind. So keep an eye on the Volatility Index. I think you focus on building a watch list here of that big three. Trend, structure, momentum. Home Depot, Tesla, Netflix, all good examples of that. So hope I gave you all a few things to take into consideration during these volatile times here, and I look forward to talking with you in the next video.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.